So, morning, Steve. Thank you for taking the time to come and chat. For those that don't know, Steve Hand is a mortgage financer. He owns his company. He's been doing it for what, 16 years?
16 years, yeah.
Oh, nice. Cool. So, yeah, let's just chat a little bit about yourself to start with. So, how did you start out in the mortgage world and then moving on into making your own company as well?
Yeah, interesting start. Because I studied at university. I studied sports science, so that was my path. Was going to go into the forces as a PT and decided to go around the world for a year. Came back and just found myself in finance. I've always been pretty strong at maths. I've always enjoyed maths, and I've always loved property actually. And I worked in debt management for a while, for about 9 months. Then saw an offer to work for somebody in a mortgage brokerage who would train me up to get the financial planning certificates. So did that. And you can go in various directions into investments, pensions and stuff, but I chose to stick with mortgages for the time being and worked with him for about 4 years. And then myself and a colleague set up in 2004. We'd, don't mind the black cat, by the way, I'll just jump.
It's all right.
Yeah, we set up then. We just felt that we wanted to do things a little bit differently. We built up necessary experience and stuff, and felt that we wanted to, plough our own path. So that was that, and set up in the northwest of England, a town called Wigan.
Right.
Little shop in the town centre, nice. And I think it's now a £9 hairdressers actually, but you could only fit 3 of us in the top. So there was me and Paul, my business partner, and after a year we hired an administrator, and we were just working flat out as you do when you start up. And she really helped us out and allowed us to take a day off. So we're just doing the Monday to Friday then. And then our next hire was an advisor. And that meant that we were kind of squeezed in. So Paul, my business partner, worked in the cellar for quite some time. And then we moved to a bigger premises when our lease ran out after 3 years. And then now where we work is we're on our 3rd premises. And it's a great place. Wigan Investment Centre it's called. And if you need more square footage, there's usually space somewhere within the office, I guess more so as we move into next year. Yeah. You can just bolt on another 500 square feet or whatever, to expand. So right. Yeah,
that's good idea.
It's been a great journey. Anyone that's been in business will understand it's not all plain sailing, and there's many challenges which you've got to navigate around.
Yeah.
But that's where you learn, of course. And it feels now we've had some great challenges that have been thrown at us the last 16 years, which we've overcome all of them. And each time it's just made us stronger and sort of pushed on. So
I think that's particularly pertinent at this year we've had as well. Nobody expected this kind of challenge to come out this year. So
no, and that's the interesting thing. Some would say interesting question mark, but that each challenge is different. So the credit crunch of 2008 was quite unique for me, and a recession that was around that time. And we had quite a long litigation battle with an ex-director. So that was an interesting learning curve and something that I've learned so much from. And then this pandemic now, that's unique, isn't it? Nobody's really experienced that before. So these things get chucked at you, but then when you grow your business or you move into a different sector, maybe in the future, then you can take those things, and it definitely strengthens you. Definitely.
Yeah, I think so. Absolutely, I totally agree. So obviously we live in a very dynamic world, as we know, but we're all very socially connected. Obviously, you're in down in England, I'm northeast Scotland. We're miles away, but we're still having this interview, still able to connect. How does that work in a business sense? Are you limited by location as to who you can work with, or because we're so connected, does it even matter? Can you work with anyone across the UK?
Yeah, and anybody. In fact, we started spreading our wings more. It was probably about 2006-07 where we got a lot of introduced business from an estate agent, and then clients recommended the clients, and they can be anywhere in the country. but more so in 2010. Between 2010 and 2015, coming out of the recession, we spent about £500,000 on money supermarket leads. So about 100 grand a year we spent, which sounds a lot of money, but as the funds come in, then you recruit people, you buy more leads and stuff, and then revenue comes in. So revenue covers that cost. It's not like £500,000 out of our own pocket, but that allowed us to acquire a lot of leads from the southeast, because London comes out of recession generally quicker than everywhere else, and they can't spread. So a fair old amount of our client bank is in the southeast, but Midlands, Scotland, of course, from being involved with Paul and you guys. So there's a real mix, and of course there's an expat contingent as well. So we have to make sure we've got the right knowledge base for that type of client. And in fact, just briefly on that, we're hiring somebody in January, the first Wednesday back, who is a specialist in expat mortgages. Right. He's come from a brokerage that just do expat mortgages. So we've got to that stage really where all our advisors have got good knowledge base, but you want stronger knowledge in certain areas.
Specialist knowledge in each aspect,
Yeah, definitely. And that was a little bit of a skills gap for us, that we're all okay with it, but we knew we needed to take our knowledge to another level. So hiring Phil was a great move, or hopefully will be a great move.
Yeah, hopefully it is. It sounds like a good one. So what exactly services do you offer? You obviously mentioned about expats, but you cover everything finance-wise from my experience. So do you want to just explain a little bit about everything that you can offer?
Yeah, so if you just think in terms of property finance, then that keeps it pretty simple. Okay. So it could be like a first-time buyer that most of them don't have much of an idea, so they really need the hand-holding throughout the whole process. Yeah. And along with that, we need to make sure, because we've got the permissions, we need to make sure that they're protected. So the necessary protection, whether it's general insurance, life and critical illness cover, we make sure that they're fully covered. So, but on the finance side, you've got the first-time buyer purchases, you've got remortgages as clients get to the end of their product, and they can stay with their existing lender, which we can arrange as well, or quite often is the case, another lender will offer you a better package, and then we'll look to move them. So there's that. And when you've been in business 16 years, that's a large part of your business, actually, your remortgage business. That's if you look after your clients, which has, fed us well over the last 16 years. And then as we've got more experienced, you tend to deal with more specialist sectors. So landlords, buy-to-lets has been strong for about 12 years. And then for about 4 years, limited company buy-to-lets. And from that, landlords that are a bit more ambitious tend to go into commercial to resi conversions, bridging finance, development finance. So I guess one of our sort of most experienced clients is a guy in Liverpool with 230 properties, and what he does is he's got a lot of single lets, so we do like the buy to lets for him, but his specialism, his niche is converting these big old period semis that you see into apartments. So we organise finance for that, and then we've got some other clients where they say, I'm looking to buy this land, the plots say 900 grand, I'd like a bridge on half of that, because I've got half of it to fund myself, right, or private investment. And then I'd like you to arrange finance on the build out of these units. And the units could be houses, they could be flats, they could be an old office building, that type of thing. And that's a really interesting sector. And that's where I'm spending more of my time now. So I've spent a lot of time in the sort of main residence and buy-to-let field, but then branching out into the bridging finance, development finance, and just more specialist niches. And then obviously still running the business. I've still got my hand in there quite a lot. But over time, as we grow, we'll get key people in where we can hand that over to. So I
think that covers pretty much everything. Got some questions on bridging finance and things later on as well. So it'll be interesting to hear what you have to say about those. A couple of questions come in that people want answered. I'm just looking at my questions here. You've answered you know, it's for first-time buyers, it's for investors. So why would a first-time buyer or a first-time investor, for example, why would they want to use a mortgage broker rather than just going to the high street bank and asking for a mortgage themselves?
Yeah, very good question. It's something that people do ask us. Why should I use you? What value do you add? And sometimes it might be the case that the best option for that client is their own bank. But when you consider that there's about 90 lenders in the marketplace, it's quite a slim chance that their own bank is going to be the best one for them. So part of it is down to the interest rate and the fees charged. Naturally, we look at the financial picture, and our job is to minimize the amount that somebody pays. It's important that you save as much money as possible, not the bank.
Yeah.
But it's also matching criteria, so somebody's profile with what the lender's profile is. And there's certain people that could walk into pretty much any lender and get a mortgage, but there's not a great deal of those. And especially when you're an investor or you've got other things going on, you might have various income streams, you might have a number of properties in the background, you could be leveraged in certain ways, which means that a NatWest or a Halifax or a Santander would just say, sorry, you don't fit our profile, you don't tick our boxes. And then we're looking at more specialised lending for people. So yeah, that's our job really. It's first and foremost, how much can we save somebody? Let's save them as much as possible and compare the market. And then let's match your profile with the most suitable lender for you. The other factor is that an average mortgage probably takes, I heard a stat the other day, of about 16 hours from start to finish.
Right.
So we have an administration team or a case management team that will chase that through right the way through. And as we're all pretty busy, I've not got time to sit in call centre queues. So
yeah.
That's a really sort of valuable add-on, if you like, with our service.
So for someone that's wanting, property finance for whatever reason, a lot of the times with property investors and that, they're obviously looking to move quickly because they're buying from people that maybe have got a reason to sell or whatever the case may be, maybe don't have the time, because sometimes property finance can take a bit of time to come through. What would you suggest would be a good starting point what would you need altogether ready to hand to you guys and go, right, this is or hand to the lender so that they can get that property finance through as quickly as possible?
Yeah, and we try and shorten that as much as we can. We've got to, of course, play within the rules and the compliance rules, but our job is to find the product, get that product secured as soon as possible, because rates come and go, and we have to get that application submitted to a lender ASAP. So with some companies that you have to jump through lots of hoops before they'll submit your application, so you lose the rate.
Yeah.
So we generally just ask for ID, proof of address, proof of income, and it might just be latest bank statement, latest payslip, or latest set of accounts, SA 302, and then ID. But there's technology out there, of course, where we can electronically verify people, and
right.
And so we don't always need a whole raft of documents. And in fact, we made a commercial decision the other week where, and we've run it through the compliance people, the lenders, and we can get people to take a picture of themselves now with a passport and just send it in to us, because you've got the face, you've got their ID, rather than traditionally having to post off that passport to us. So that's great for speed.
Mental, the world we live in. All right, cool. Well, I had maybe, I don't know, 8 to 10 questions lined up, and I think you've answered them all in 4 or 5. So
sorry,
very in-depth answers. I like it. So I'm going to move on now to the questions that I got from inside the Protege group. A few members asking a couple of questions on specific topics. So there was 2 people asking about offset mortgages, so I've kind of rolled it into one question. So Rob Wester asked one first. Refinancing your home using an offset loan, do all lenders offer offset loans, and how do they work?
Yeah, very good question. That no is the answer to that. There's not that many that offer, proper offset products.
Right.
quite few and far between. And they used to say that they benefit the high rate taxpayer more so than the basic rate taxpayer, and that is true. But they're very useful because you can, like with a true offset, let's say your house is worth, average house-ish, 200 grand, and you borrow 150 grand, you could then pay down that mortgage. Well, your savings, if you've got 50 grand sat in savings, that offsets the debt then. So you're only paying interest on the 100 grand if you've got 50 grand sat in savings.
Yeah.
You forego the interest on your savings, but hey, we're only getting 0.1% at the moment anyway, aren't we?
Yeah.
So, that's a good way to do it. But also you can then redraw those funds whenever you wish.
Mm-hmm.
And whenever you want to redraw funds with a bank, there's generally fees. So if you want to further advance or whatever, so with an offset mortgage, there's not. You've got this like pot, if you like, that you can dip into, take out 20, 30 grand, for example, go and buy a buy to let, put it down as a deposit, and away you go. So it gives you a lot of freedom.
Yeah, a lot of freedom and flexibility.
Yeah, as well as save you quite a lot of money in interest payments. And yes, the counter argument to that is that but I'm being charged more in my interest rate. And yeah, I guess when you look at the rates on an average for an offset compared to a non-offset product, they are marginally higher, but we're not talking a great deal, and that will be far outweighed by the savings that you can offset against it and the facility to be able to redraw your money when you want to.
Yeah. And ideally, the money you redraw, you should be bringing more back in anyway. So.
Oh, yeah, but for it's a bit of a no-brainer for a high rate taxpayer.
Yeah.
And it's a no-brainer for a property developer or investor, because they're really making their money work hard and leveraging that rate.
Yeah, absolutely. Cool. Next question was from Nicole Winter. Getting a loan for a buy to flip. If you're not a UK resident but have a UK bank account, what options would you suggest?
Yeah, UK, some connection to the UK is what's important here. So not a UK resident. Are they an expat? Do we know? Are they?
Not exactly sure. I don't know. So just they've got a UK bank account.
UK bank account, yeah, some connection to the UK, so that's good. We deal with expats where they might be like living in Europe, Asia, the Americas, wherever, and that's fine. There's a few bits of criteria that lenders will want to check, like who do you work for is important, and what's your current level of income.
Right.
Generally, they want a stronger profile, but usually when you're working abroad, you're earning that bit more. Quite often you're working for a multinational, so it's quite a strong profile on paper. We deal with people, there's a guy I dealt with not too long ago that isn't an expat, he lives in Switzerland. He didn't have a UK bank account actually, but what he did do is he bought a property in Liverpool for cash and then just held on to that for a while, and then he wanted to raise against that property to then go and buy more property. Okay. So there's lenders that are okay with that. So yeah, the UK bank account is fine. Yeah, we would just look at the lenders that are out there, put through the other criteria as well, because that's important. Yeah. And usually it filters certain banks out, and then you're left with a core few.
Right. Cool. Yeah, I've got a mammoth amount of questions from Andrew Lindsay here. I'll start. I've got 3 questions. So when refinancing a buy-to-let on a refurb with a 6-month cycle, when should you initiate dialogue for a top-up? Is it month 4, 5, month 6? And what is the subletities of the process in terms of admin, paperwork, new valuations, etc.? How does that all work?
So most banks, it's once they've granted you a mortgage, they will grant you a further advance in theory after 6 months of having that mortgage. So with like one we did the other week that I can think of, it was we had to wait till month 6 actually before we could apply. So it's the actual date of applying rather than drawing the funds down. But I have come across other lenders in the past where they've said, with us, our policy is you can draw the funds down after 6 months of having the mortgage account open. So therefore you could apply, say, month 4.5, 5, if it's going to take or 6 weeks to go through. If there's enough evidence online, then a desktop valuation is okay. But if you've added value to a property, we need to demonstrate that value add. So in most cases, a surveyor going out to the property would be the way to go, and then they can get the full picture of what you've done to that property, and it just increases your chances of getting the value that you need.
Okay.
Was there another point on that? There's a valuation point, wasn't there?
What are the subtleties of the process in terms of admin of paperwork and new valuations? I think you more or less covered it, but
yeah, the paperwork side of things is it's not quite as onerous because you're already with that lender. So there's a form that we will submit to the lender, but it's a shortened version of that, and they may just ask for, say, latest payslip if you're employed, latest proof of address maybe. But with all the technology these days, that actually might not be necessary.
Yeah.
So, yeah.
Cool. For a flip, just going back to bridging finance, what are the pros and cons of bridging finance? What are the cost rate differences, and why use bridging when you can use flexible buy-to-let mortgages with no exit penalties?
Yeah, good point. So this is on, excuse me, on buying a property.
Yeah.
On purchasing.
For a flip.
Yeah, for a flip. So, like, my advice to people would be with flips. There's a very good argument for going in your personal name first of all. So this is a little bit on the tax side. Go in your personal name. If the property's habitable, why not use a mortgage with no penalties? And then you can utilise your capital gains tax allowance for that year. And then further flips, put in a limited company. Fair enough, but utilise your capital gains tax allowance first, and use a mortgage company where possible, because rates are cheaper, fees are less, as long as, this is the key, as long as the property's in a habitable state. So there's got to be a bathroom kitchen. It's okay if it's grannified and it's like olive bathroom suites and the like.
Just imagine that now.
Yeah, pink carpets in the bathrooms. I saw a picture from Barry the other day, or it might have been Ross actually. But yeah, that type of thing is okay. It's just what it does do though is it lowers, because lenders assess the application on the market rent for a flip. So even though you might be planning to flip it, they're assessing it on their stress test based on what's the market rent for that property, and can we lend the amount that the client wants. So if it's grannified, then the market rent's going to be less than if it's in walking condition. So you just got to take that into account.
Yeah.
But quite often you're getting the property for a bit less anyway. So usually they stack up on the stress test.
Cool. So I think that's answered it.
On the bridging side, yeah, bridging finance it's always been considered last resort finance, and yeah, there is a good point to that, if you like. It's got its place though, because bridging finance is faster. So if you're under pressure at auction and you don't want to take the chance that the lender can't get the funds through in time, and there's no guarantee, then a bridge is better. Distress sales and the like. And if the property is dilapidated and you don't want to take the chance on the valuation, or it's failing the EPC rating, then a bridge, they're a lot more flexible. Get the bridge on it, at least get the property acquired, and then do what you need to do to get it into a tip-top condition. And then if you're not selling it, put a mortgage on it. Or in fact, even if you are selling it, it might make sense to put a mortgage on it, because it could be months and months until that property sells. Mm-hmm. And you're paying bridging rates instead of mortgage rates.
That's a good point, actually. Yeah. One that a lot of people maybe don't even think about. Last question from Andrew. I'm just going to kind of read it as it is. It's a little wordy. If purchasing a property for above home report value in Scotland for renting purposes, meaning the lender needs a new valuation survey to access rental income, would they commonly lend 75% on the higher purchase price if the rent income stacked up, or say 70% of the lower HR value?
If you're, it's a good point that. if you're paying, if the agreed price is higher than the home report valuation, bear in mind that the bank will want to do their own valuation in a lot of cases anyway. If they agree with the price that you're paying for it, then they will lend 75% of that figure. Yeah, because initially you think it's the lower of the two, but not necessarily if the bank agrees with you with what you're paying. And of course, they'll assess the locality to see what the sold prices have been like. So yeah.
So there's option to hopefully get the higher value. Last question, David Whiteford, bridging loans. Yeah, going back to bridging loans again, can it be paid at the end of the term, or do you have to pay monthly payments?
Both. Answering not like a politician here. So no, it's excuse me. In what most clients do is choose not to service the debt each month. So you can get up to 75% on a bridge. So let's say you're buying something at 100,000, the lender's lending 75,000, 75%. What happens in most cases is they'll take off their initial fee, which typically it's 2% of the loan. So what's that, £1,500? They'll take off that 75,000, and then let's just say it's 1% a month, the rate that they charge, because it's give or take 1% a month. And it's a 6-month facility that they're agreeing. They'll deduct 6 months interest from that initial loan. Right. So what you need to bear in mind is that 100 grand purchase price, loan 75 grand, they'll deduct 2% of their fee off the 75 grand, and then say, let's just say 6 months worth of interest off that. There's one or two other fees that are smaller that they'll take off, and then you get the net figure. So when you're doing your maths, the net figure in that example, if the product goes up to 75%, you'll end up with between 65 and 70% of the purchase price. But you won't have to pay the monthly payments on the for the debt because it's been taken from day one. But some people choose to actually get a higher amount at day one and service the debt, so pay those monthly payments over the next few months or so. That can be, not with all providers, but that can be arranged as well. Excellent.
Cool. Definitely answer that question, that's for sure. Cool. I think that's the end of my questions. Is there anything else that you want to add that we've maybe not covered? Anything that springs to mind?
I would just say that I learn something, every day in this job, and there's a lot I don't know, so I'm constantly learning. I speak to the business development managers on a regular basis because I want to understand their criteria, and things change over time. And I like speaking to more specialist lenders because, especially since being involved in the Paul McFadden group, there's it's making me become a better property finance guy, because I'm sourcing out more specialist lenders all the time to service my clients, and it never ceases to amaze me how creative some lenders can be, and it's different than your high street bank where it's very fixed and it's like, this is the rate, this is the fee, this is our criteria, you either fit it or you don't. Yeah. More specialist sectors can move things around and to suit. So if you don't meet criteria in one area, but you're very strong in others, they'll make a commercial decision on it. Yeah. And that's what's great. And one of the things is that, one of the key things is that, yes, they focus on experience. So as you start to do larger developments or building out of the ground, big conversions, that type of thing, the lender's really interested in you, as well as what you're putting in, right, and stuff. And that's why, we hear about leveraging someone's network or joint venturing with a strong person with lots of experience, and that's important. That's definitely got its place in the market. Yeah. So you never think that it can't be done. Quite often there's a way of making things happen. It's just about being creative. So yeah. Just
find the right mortgage broker, come and speak to you, and you'll find.
Yeah, a lot of people don't. I totally get why a lot of brokers don't want to do it, because they're making decent money by doing main residence mortgages, buy-to-let mortgages, and it's quite easy, happy days for them. Yeah. And the thing to bear in mind is that the market, brokers tend to be in that age bracket of 50 odd, 60 odd years of age, where they've built the client bank up over many years. That it's the industry is historically sort of one-man bands, and then they have an admin person to help them. So kind of got an easy life in a way. We've built something it's not unique, of course, but there's not that many companies where you've got a team of people, like there's 13 of us, soon to be 14, where you've got like specialists in each area, and you've got a strong support team, and you will take on those challenging cases at times. We don't like saying no. We want to say to people, yeah, let's challenge us with that. Let's look at it and see how we can help, see what we can do.
Absolutely. Well, because if one person's got that problem or that issue, someone else is going to have it as well, Yeah, great. So if anyone is looking for anything property finance related, how can they get in touch with yourself? I'll drop any links, website links, Facebook links, whatever. Because I think you've got a Facebook page, haven't you?
Yeah, it's something that I must say, hands up, our online presence isn't really what we are about. Our website definitely needs designing, which we're on with. We're called Express Mortgages. People can message like me if they wish, or email into our company, which emailing our head advisor, Jane.Gough, is probably the best thing to do. And then Jane will look at workloads with all the advisors and divvy the inquiries up accordingly. But initially, if people want to reach out to me, that's totally fine. And I like to have a little chat with people anyway, and then, sort of hand over and go from there.
Cool, excellent. I'll maybe try and drop that email address below, and maybe a way to contact yourself, if that's all right, just so they can get in contact with you if they've got any questions, and if you can help them out. Excellent. Well, thank you very much for taking the time to come on and have a chat and explain all things property finance. Your knowledge is unbelievable. But yeah, thank you very much for taking the time. Really appreciate it. I'm sure loads of people are going to get loads of value from it.
Thanks, Brendan. Yeah, I hope so. And any further questions, reach out. I love being challenged, so give us a shout out.
Excellent. Right, thank you, Steve.
Thanks very much.